Morning, Daily Rip crew. How we doing? Hope everybody is having a great morning. We just had that PPI data come out 30 minutes ago. Shy. Market's moving. Market's liking it. It looks like lower than expected. I think it was higher than the previous though. But how are we feeling about this data right now? Seems to like it right now. So we'll see what
So,
the open has to offer. I'm gonna be using the data highs and data lows as levels going into the open. But exciting morning here. How are we feeling?
so I hope I'm wrong, but I think we're fading this move, and I think the reason for that is TLT. TLT is not green. 10-year yield is a big issue, and that's been the driver of this correction we've had the past couple of weeks. Initially, it popped TLT to green after seeing the data. Now it's fading back to the low of the day. So I think that maybe for me, hopefully I'm wrong because I will love to see a bounce back in the market. Also, if we don't, I'll add to my higher conviction names. But either way, I think maybe there's not going to be legs in this bounce until we see CPI tomorrow, and TLT is kind of the tell. So I'm not sold on it, but we'll see what's going to happen in 30 minutes at the open.
Yeah, we'll see. I'm liking the structure so far. I would like to see lower before higher if we are going to do it, and I would like to see higher before we go lower if we're going to do that. So, kind of either way we go, I'm happy. Just trying to catch some intraday moves. I actually traded yesterday, which I usually don't trade Mondays at
Ooh.
all because it's not very good for me. Not enough data to go off of really, but given what we had last week, I was feeling like we needed a little bit of a relief bounce. So ended up starting the week off with a solid Monday. So we'll see if we can keep it going into Tuesday here. But let's recap with what happened yesterday and hop into the newsletter real quick. Here's the heat map. Apple red, Microsoft red, Nvidia red. So some of your big tech names not looking so good. Google, Meta also red there. Amazon slightly down there. Tesla holding well, right? So one of the names you've seen just be crazy strong throughout this whole move. Holding strength there. So love to see that. JPM looking strong. I know we got earnings this week. We got a ton of bank earnings kicking off this week and then into next week as well. So something to watch out there for as well. And then we have energy doing well. Shy, how are we feeling about this?
Uh, Hold on for a sec. It looks like I'm using my AirPods as my mic. I'm trying to fix that issue, so you might have to take it
Are you?
here
No
for a
worries.
little. Does it sound weird on your end?
No, it sounds like you're using the mic. If it was the AirPods, I'd be surprised. I need a pair of those AirPods because the microphone sounds good.
I mean, it says I know it says AirPods on the communications. It's weird. Okay, so
Very
regardless,
interesting.
I mean, heat map. So I think people are getting a little squeamish on Nvidia. It's kind of weird. Where I think it's a rhetoric that occurs every couple quarters, especially ahead of a pretty big ramp up on a new product. You're seeing some kind of FUD information out there that's like, oh, Blackwell might cause delays due to overheating, etc. I just think Nvidia is going to have such a high floor for quite some time, for years. And it's not just AI now; it's quantum, robotics,
Well, you said
physical
you
AI.
don't
Like
think we're going by under $100 anymore, huh?
I don't think ever again. I
I
really
love
don't
that.
think so. I think I think they did such a great job on building an ecosystem around their hardware, specifically CUDA, that CUDA cemented themselves into permanence. And before, they were much more cyclical. But now I really do believe NVIDIA is in that permanence era. Like what Apple is for the ecosystem around consumers, like when they created the App Store, that provided them permanence into the future.
Yeah.
So I think NVIDIA is kind of creating the same kind of permanence into the digital economy via the CUDA platform. And any kind of major dip, uh, it's tricky because I'm a risk on investor. Like I have a growth portfolio, a small cap portfolio. I bought into heavy into Nvidia during that yen carry trade crisis in 90. I sold a couple weeks ago at 140. Not because I'm bearish on the company. I think there's better alpha out there to be made. If Nvidia continues their dominance, there's going to be a lot more sympathy plays that are going to give me that alpha. So that's kind of why I reposition. Like Astera Labs is a great example. Like I sold my Nvidia to start a position in Astera Labs because inference is going to be the future, and they have a very interesting niche within that. But yeah, Nvidia is the heartbeat of the digital economy, and they're here to stay.
I'm with you there. Real quick, just a shout out to all the people watching on the StockTwits app and the web platform. You guys can now watch the stream live on there. So love to see the people in there. We got 160 people in the chat. So shout out to
Let's
you guys.
go.
Love to see it. Moving on from the heat map though, let's get into this. A big day for healthcare stocks. Insurers who administer private Medicare plans could see a $21 billion payday in 2026 under a plan proposed by the Biden administration. The proposal would raise the plan's base payment by about 2% net year, but insurers would likely get an average 4.3% increase in overall revenue after certain adjustments. And with the Biden admin previously challenging these companies over costs, many believe Trump's adjustments could be even more beneficial. What do you think about that going into with the Trump-led presidency? Obviously, Biden administration was a big part of this, but with Trump, that people are thinking it might be even more bullish. How do you feel about that, Shy?
No hablo, Medicare stocks. I signed an NDA. I can't
Got
talk
you.
healthcare.
All good. All good, baby. Well, we'll just move on then. Like Humana did some numbers. It looks like Moderna down 17%. Intracellular therapies up 34%. The biotech firm will be acquired by Johnson and Johnson in $14.6 billion cash deal at a 40% premium to its latest close. Interesting there. Sage Therapeutics up 37%. Pharmaceuticals up 294%. This explosive move followed the announcement of positive results from a phase 1B trial of its cancer treatment PH762, which is designed to enhance the immune system's ability to target tumors. That is wild. So big pop there. I would be careful with stocks like that with, massive moves like that, almost 300%. You can't. I used to look at those when I was first started trading and be like, oh my gosh, like something like that is just that, like I want to be involved. Honestly, for me, more time than not, I actually don't want to be involved. So just something to watch out for there. I would be
Well,
careful.
I I think out of all those stocks you referenced, like I do think this is also feeding into the thesis I had for 2025, M&A spree from big pharma. I think we've gone a big pharma acquisition, like one or two of them a week since the year began. Like I'm telling you, big farmers are going to be using that working capital that's been sitting on the sidelines for years. With the rates going lower, they're going to utilize that capital, and the way to do that is buying undervalued assets that have been handcuffed due to higher for longer interest rate environments, and you're just going to see a buying spree. Same thing's going to happen in software, specifically cybersecurity. But that's my commentary on that. And Moderna, everyone keeps calling like, oh, Nvidia is the Cisco of this era. I think Moderna is the Cisco of this era, and like it's not even close. They fumbled the ball on the cash infusion they're getting during COVID, sat on their hands. They didn't really implement that in new growth avenues going forward. Like they just like didn't do much with it, and now they're really dirt cheap for how much cash they have. But like you have to ask yourself like, what's Moderna's future going to be? Like what's the lever they can pull that's going to drive the next growth for them. Not just like the argument can't just be it's really undervalued and they have so much cash. They're going to do something in the R&D. Like you don't park your cash in a company like that. You have to wait to see what their vision is. And Moderna is like it's every year they're just cutting their guide, and it's sad to see. Like this is what poor corporate governance is like the epitome of it. Moderna is an example of that. They just did not innovate quick enough or pivot quick enough, sat on their hands, and now they're becoming obsolete.
I think I've only shorted Moderna, to be completely honest with you. I'm pretty certain. DJT looking like this is trying to break out. I got some volume. Let me look at that chart myself as well. But obviously, I mean, got to keep an eye on this, especially when Trump comes out and like says some crazy stuff. You got to keep an eye on DJT because this thing can get some movement just based off whatever Trump might be saying or doing. So definitely smart to keep an eye on this when you hear about things going on politically. Looks like this got a nice pop yesterday. Really trying to break out of this kind of wedge formation we have.
Well, I mean,
Um,
it's the inauguration bump. I
yeah,
like it feels like it's more of the solid news like once he becomes president. But
I would think
I
so
don't.
as well.
How do you think? Let's just say hypothetically the rumors are true. Elon Musk buys TikTok because Trump said like, "Can you buy this for me? Because I want to keep this in America. It's a good narrative for me to for my propaganda. Propaganda, good or bad propaganda, it's still propaganda." How do you think that's going to affect the Trump media stock
Well,
if like
I think I would anticipate a rip only because there. I mean, there's no
partnerships,
tick. Yeah,
collaboration
there's no
potentially?
TikTok
Yeah.
stock. So like, what's the closest thing for people to kind of like,
Hmm.
I guess bank off of that type of move, and that would be with DJT. I think that's what I would think. But at the end of the day, right? Will we maybe see moves in other social media stocks, right? Like it's very very possible, but I would bet on this because he's right hand man with Trump. He's in they're buddy buddy. So I would go with this and see if he could get a move off of that. But definitely keep an eyes on this. It looked very strong yesterday, a lot stronger than it's been. Right, that's what I look for when you've been in consolidation like this or looking for a reversal, looking for something out of the ordinary. And yesterday was definitely out of the ordinary. It's just a matter of if you can continue those types of moves, right, and like actually hold momentum, which you've kind of not really seen on a name like this, right? It gets momentum for a little bit and it comes right back down. So
Yeah.
just be careful, but there's definitely opportunity, right? So for the short term. Elf Beauty. Oh gosh, this is a name I haven't seen in a minute, but makeup stocks. I'm curious how you feel about makeup stock shot. I personally I like to pick some up every here and there. Just because at the end of the day, I mean, I feel the makeup business is never going away, right? It's some of the biggest consumers in the world, right? Women will never stop buying makeup, and you got some men even buying makeup nowadays, right? It's like it's wild. So, um, I personally like to buy dips. They're really not names that get a ton of momentum all the time, but I do like to have a little Ulta, a little Elf, even Lulu. I like Lulu as well, even though it's not makeup, but it's in the same kind of industry right there. So I'm curious how you feel. This chart is looking interesting, trying to get some momentum to the upside. This more just looks like basing price action to me for the most part. We need to see some real momentum, but curious on your thoughts.
Yeah, so I think Elf is the cheaper brand, like, not brand name, but the cheaper version for makeup. So it's I think the whole narrative around makeup, I think I stole this from Buffett, where if we're gonna hit a recession, makeup stocks like the Ultas, the Elves, they're gonna do well because the thesis is you can't afford those classes, you can't afford Botox, you can't afford all these like nice things to have. You're gonna overdo the makeup to make yourself look better and feel better, type of thing. So like that's the narrative on like if a recession does occur, these kind of stocks are somewhat going to catch a bid because of it, which it's crazy. Like I never even thought about that, but that's kind of interesting to me. But either way, like I don't really. I think a consumer tsunami is coming our way. I think there. I think it's very under discussed. I think it's. I think a lot of people are kind of spending on credit. They are making less money. Inflation is definitely it's getting better, but it's still significantly higher than a couple years ago, and they're making their money that bringing in is worth less and less and less. Like, I think there's going to be eventually a tsunami on any kind of consumer spend. And I don't really want too much exposure at all in consumer stocks because of that, because that's my thesis. Hopefully, I'm wrong, but I just think 2026, that tsunami is going to really hit. So I just don't really see why I would want to exposure in these kind of stocks if that's my thinking process.
I can get you 100%. It kind of falls too. Like I feel like it's funny. Like when a recession hits, everybody will cut back on bills, but like they'll never cut back on like their phone, right? Like even some homeless people have phones, right? Like so that's another thing I find interesting is like in a recession, would you see like I guess like phone company stocks, right? Like get a pop during something like that. Just kind of runs through my mind because that's something that
Hmm.
seems interesting to me. You know what I mean? Nobody. I mean, I've never heard of anybody. Oh, recession hits. Let me turn off my phone. Like that doesn't happen. You always keep your phone on, right? So it's interesting stuff there. 10-year yield. We've been keeping an eye on this, obviously. Just way too high, right, Shy? Yeah, way
This is
too
the
high.
kryptonite right now for the market. Like I'm telling you, like this being closer to 5% than 4% will provide ankle weights for any rally we have in the market. Like it's not going to like let it fly. This needs to go lower. It just has to. Like there's it macroeconomics 101, like this can't be close to 5% and the market rallies. It doesn't make sense. One of the things are going to give up. I think eventually once we get the actual commentary from the tariffs on Trump that's like not as bad as feared, I think that's when we see that rug pull occur on the 10-year yield and that's when the markets will catch a major bid. So I think we're just waiting for that to occur and after inauguration, but and maybe a cool CPI print tomorrow will do the trick. Who knows? But either way, this needs to be below 4.5% and not itching towards 5% for the market to have that V-shaped bounce back and maybe retest those previous highs.
Yeah. So we want to see this chart reject and come on down because, like you say, it's just I like what you said, ankle weights for the market. That's exactly
Mhm.
what it is. It's like you might get a little bit of a rally, but it's gonna get weighed down at some point, and we've kind of seen that for the most part, right? Like any little pop we've really gotten over the past few weeks has gotten faded. So something to watch out for there. I don't keep an eye on the 10-year super closely, but um, what like when I'm intraday trading, but maybe something to keep an eye on, I
And
guess.
for everyone wondering like how to track the 10-year yield, just do TLT. TLT is the
Yeah.
easiest one. If TLT is green, that's a bueno for the market. That means the yield's going lower. So that's like for me, I didn't have to go on CNBC or go on the chart to see what the 10-year yield's doing, 30-year yield. I just go on TLT, the ticker, see if it's green or red. I saw that it bounced from the data that got released from PPI, then faded it. I was like, oof, that's not good. And I'm part of the camp where that's the ankle weights of this rally. So like I'm not believing any kind of bounce until that's green and like going up to the right. Let's see what it is right now. But yeah, I just want to let everyone know like TLT is the best ticker for this.
Yeah, moving on. Let's what do we got? Nutrien breaks out a downtrend. This is looking interesting. Just a giant wedge you see here. Obviously the market structure has been to the downside, lower highs, lower lows. You are trying to see a little bit of a breakout though from those lows. So maybe you're getting a little bit of a market structure shift, right? For me, this wouldn't be enough to want to be buying it up. I'd want to see more. I'd want to see actual higher lows and higher highs start to form a little bit of a base here. But either way, I mean, it's starting to break out of that trend. It'll bring short-term opportunities, right? So even for like a longer-term scale, I wouldn't really be super excited about this quite yet. For the short term, it might bring a nice, intraday move or a few day long move. So something to watch out for there. I don't think I've looked at this ticker ever. Do you have any
So
thoughts on Nutrien?
I mean, it's a fertilizer company, I think, or
Okay,
like some farm
interesting.
inputs production.
Yeah.
So
So definitely more
not,
of a day trader. I feel like
yeah.
day trading stock for sure.
I mean, does not fit my growth tech lane at
No,
all.
no. But that's the beautiful thing about day trading, right? Like, I love you guys. We talked with Michael Mouse last Friday, and you guys, if you have talked with him or like seen any of his videos on trading, he very much just trades stocks that he has no idea what they do, what the companies are. That's totally okay, especially when you're day trading, right? If you're long term investing, it's a different story.
Well,
But day trading, right? He just has an algorithm that picks these stocks for him, and it doesn't matter if it's a dog food company or a big tech company. If there's a setup on it, he's gonna play it. So love that, and it depends on the style of trading you got. But
that's
what's up?
that's so that's so not my style. It's like
I know it's so opposite of you. I
I feel
know.
I feel like I'm like a romantic where he, for example, those kind of traders like they look for one night
Michael
stands.
Nouse is
For
the
me,
one night stand guy, and
yeah, I'm looking
Shy's
for a
falling in
relationship.
love, man.
Exactly. But I will say like industrials. I don't know much about the stock, but seeing it's a farm input producer, like I do think industrials are a undervalued tailwind for AI or autonomy because there's agriculture, you can automate that very seamlessly. Like from someone like in a room, they can automate 5 different machines at once through like AI and autonomy. Like I think that's something that's like really you thought margins weren't margin expansion opportunity really wasn't possible for industrials, which again it's really tough to do. But I do think in the post AI world, like that is a lever they can potentially pull. That maybe those names aren't catching a bid, but like I could be way early on that thesis, or I could be absolutely wrong. But it's something to think about.
Definitely. We got the market opening in about 10 minutes here. I'm just taking a look at Tesla and some individual names, and then watching NQ, of course. I marked those data highs, data lows. I'm going to be watching those for a little bit of manipulation in the morning time once the market actually opens up here. But we'll see what happens today. Obviously, market's liking the print so far, but that could change going into the open. So I'm going to be ready for either direction. I don't really have much of a bias at the moment, though, to be
I
honest.
mean, it's just confused. I'm a little confused. Where PPI was below expectations, it was a cold print, but the 10-year yield just hit a new 14-month high, 15-month high. So like I'm just like, what is the bond market trying to tell us? Like it's the bond market is one of those tools in the stock market that are just like they don't call BS. They tell you actually what's happening. There's no narrative manipulation. Like it's kind of like a really honest tell of what's occurring. So either tariffs are just way worse than people anticipate, or it's much more of a reality. It's not just a bluff or a game of chicken, or there might be somewhat of like maybe the Fed only cuts 25 basis cuts this year. Like that would be a very very big pivot because I think that's just almost justifies like a higher for longer. Like where the rate cut began 50 basis cuts recently. Actually, it was 75 basis cuts in the past like 4 months. If we get 25 basis cuts again this year only, like that's definitely somewhat of a, again ankle weights towards the market rally. So interesting divergence.
Yeah, if anybody in the chat, Stockwoods chat or YouTube chat, feel free to throw out any tickers that you guys want us to look at. We'll take a look and give our thoughts. But yeah, just keeping an eye on things going into the open. I don't know. I'm still feeling. I know you are kind of looking for potentially a downside move still with this 10-year as high as it is, Shy. I'm kind of feeling potential downside as well. The hard
I mean,
part is I feel like we still need to get more of a relief bounce from last week, but I could be totally wrong on that, right? We don't necessarily need to do anything. The market can do whatever it wants. So
so I think the way we finished yesterday in the market was exactly what you wanted to see. Like finish the high of the day, that one technical level I've been like being a dead horse on is the 21-week EMA
hmm
on SPY. Like that's been the level every time we retested that since October 2023 breakout. When the rally began, we bounced. We were below that end of day Friday. That level was 580, 581 for SPY, and we closed at 578, 579. I'm like, oh, geez. And then Monday opened bloody. I was like, this feels like a new characteristic of the market, and we have a magnet towards the 560 level, which is 200-day SMA on the SPY. We bucked that narrative. We intraday rallied, and we finished at the high of the day, and we have this morning. If CPI comes in line or just same thing as cool as PPI, I think, and the 10-year yield finally gives out just a little, like maybe not 4.5%, but like if it's just 4.65, 4.7, like I think that'll be good enough for like a pretty great bounce in the market the rest of the week. So that's something to monitor. And we have a lot of tickers to talk
yeah,
about.
we got some tickers to look at. Doge. Oh my gosh, I haven't looked at Doge in a minute. We're sitting at 35 cents here. Nice, nice Doge. Um, well, crypto we know has been pretty choppy, right? Bitcoin has been retesting that 90K. I'm pretty sure. I don't know exactly where it's sitting right now, but obviously it's definitely a bit of a leader for things. So, as long as the big guys in consolidation, I think Doge is going to stay kind of in its consolidation as well. But overall, on the higher time frames, trying to get this pop and trying to get back to that like 40 cent resistance. I don't know. I don't love it. I think if you're gonna, invest or trade crypto, I think trading the big guy
Well,
Bitcoin or Ethereum are your best bet. But it's definitely getting some momentum. So what
I
do you
got to
think about
ask,
it?
what's a sympathy play for if Trump does buy TikTok? What do
I
you think
mean,
is going to happen to Doge?
that's true. Very true. I think
That's
you
something's
have a
going to be,
point there,
yeah.
right? So it might be an asset to capitalize on through that for sure. So something to watch with that. I didn't really think about that. It's true. Something to watch for. What else we got? Microsoft. Let's see. Obviously, Microsoft is a big market leader, so something we want to keep an eye on. But this is another name that's been in consolidation. You look at it on a daily, we've basically just gone back and forth in this range since, gosh,
I'm bearish on Microsoft. I don't see them
we're just
as like
we're just in a giant range, man. I don't love it. It's hard to get a clear like thought process for which direction we're really trying to go right now, right? Obviously, if you zoom in a little bit more on like an hourly chart, I mean, I just see lower highs, lower lows.
well I
But
I
um,
I mean I called this out in the summer this past I was like dead stock for years. It's not months,
you
it's going to
were
be for
talking
years.
about that, yeah.
Yeah, so like it's because their PEG ratio is above 3.0. That just gives some context. Like that one PEG, price earnings growth, that's my favorite metric to use to quantify mature tech companies. I think it's Peter Lynch's favorite growth metric as well.
hmm
Anything above Two is overbought. Everything overvalued. Anything below one is undervalued. Microsoft is being at a 3.0. I think it was a 3.2 last time I checked. It's like, oof, that is expensive. There's a premium assigned to them, obviously. I think the premium is associated with their first mover advantage in LLMs through OpenAI's partnership, um, or their investment. However, you're noticing, like, especially with what Meta's doing on Llama, there is a race to the bottom on LLMs now. It's going to be a commodity. It's a worst kept secret out there. So if that's why Microsoft's getting somewhat of a premium, the valuation kind of needs to catch up to them, or it needs to pull back. I think Microsoft's presence in enterprises creates such a high floor on the stock that it probably doesn't pull back significantly at all, but it might not go anywhere until that valuation catches up to them and that PEG starts trending towards the median, which is 2 or a little under 2, 1.6, 1.8. So that's why I think I'm bearish on the stock. I think it's just a dead company, and I think everything that they're communicating on Azure is manipulated. A lot of financial engineering from left brain to right brain on what they do with OpenAI. And I think that there's just better alphas out there. Like I don't want to say that Palantir's operating system will like compete will demise Microsoft's presence in enterprises, but like it's somewhat of a they have to kind of look behind their shoulder a little for what Palantir's AIP is doing in enterprises on the commercial side. Like they just do. Um, and that wasn't a headwind for them like 5, 6 years ago. Like Palantir is all government, but now Palantir is kind of eating into the commercial side of their business. They have to watch out for the little brother that's becoming the rising star. Other than that, I mean, Microsoft's an incredible company. They have Azure, they have GitHub, they have the Copilot, they have like the cybersecurity is incredible. It's like they're fine. I'm just purely talking valuation. It's something I just would not invest in for quite some time.
Well, yeah, and with that, it's like, okay, well, maybe I'm not surprised we've gone completely sideways. I mean, just look at a weekly or a monthly chart, and it's very boring. So, not something I really want to
Mhm.
be involved in. Going into the new year right now, at least we got Nvidia next. Love Nvidia, but similar kind of here, just on a zoomed in time frame a little bit more, right? And Microsoft is really consolidating on a higher time frame, whereas Nvidia, it's we're still consolidating on a daily, but I feel like this has more potential to get an actual move rather than Microsoft. But still, just in this range we've been in since pretty much October of last year, and we haven't really done much. I mean, we've tested the top of the range. We just hit all-time highs. What was it, Tuesday last week? And that was great and all, but we just peeked our head over and came right back in, right? That was really nothing special at all. So right back to the bottom of the range, and now we're getting a bounce at the bottom of the range. It just makes sense, right? We're going back and forth. So at some point, I would expect a big move to happen, but until then, you're just going to see this back and forth boring price action that we've seen on Microsoft as well, right? So I don't see a ton of opportunity here for me unless I'm just, obviously holding my long term shares or maybe catching like a short term intraday trade. But I haven't been looking to really swing trade this or anything like that personally. Just don't see a lot of opportunity until we really get some clarity out of this consolidation area. But I don't know how you feeling, Shy. Love
I mean,
Nvidia long term, obviously,
I
but it's
think
just
Nvidia,
like boring right
yeah,
now for me.
it's boring right now. It's consolidating. I think there's been so much noise on Nvidia that hasn't been there in the past couple of years, and that noise is delays in Blackwell. Um, like these big tech companies are creating their own unique chips now through partnership with Broadcom and Marvell. Like that's a new competitor, and I just think like there's just a lot of noise. However, Nvidia again long term is going to be fine. I do think this hits $200 eventually. I do think that could their CUDA platform cemented themselves into permanence for the digital economy. There's no cyclical risk as much associated with this name, and them having a PEG ratio under 1, I think it's a zero point 0.8 right now. It's undervalued in my opinion. So as soon as this pullback stop a correction stops in the market, I do think this is going to retest that previous high, and then from there it's going to be an earnings story. And I think Blackwell is ramping up and it's going to exceed expectations, and we're just going to go on from there. And people are going to Nvidia's doing the same thing over and over again. They're just continuing to outpace expectations that are sky high, and it's going to hit $200 in the next 18, 24 months.
Well, here comes the bell in 15 seconds. And then we also got our man Austin coming in to join us. So love to bring him in now. But See what this market
Palantir's
does at the
catching a bit,
open
up
as well.
4% pre-market. Interesting. I'm looking at that.
There's that bell. Boom. Yeah, Palantir getting a nice pop here. Jeez. Hey, there's our man Austin. What's up, brother?
Then how we doing?
Good. How are
Hey.
you?
Good. You guys can hear me and see me okay?
Yeah, all good.
Yeah.
Good to see you. I feel
Perfect.
like I've heard you on Spaces for so many times. We've done Spaces together, but we've never done like a live stream. So nice to see you.
Yeah, man, you as well. You as well, Jordan. What's up, Shy? Good to see you, brother.
What's up?
Congrats
What's up?
again on becoming the coolest dude on the block, all in a matter of like 2 weeks.
Appreciate it. Honestly, I was even more excited about last night, which was the Rams winning the first playoff game, than I was going on Fox
Oh,
Business.
really? Hell yeah, man. That's amazing.
Hence the gear. But yeah, I'm looking at the market right now. So, Austin, catch you up. Like, obviously the market's catching a bid pre-market due to PPI coming in cooler.
Yep.
I called offsides. I think this is going to be a fade due to TLT being red, and I think the phrase I was using, that 10-year yield is the ankle weights for this market bounce.
That's
We
right.
might bounce, but I think it won't be as explosive as you'd assume because of the 10-year yield. The bond market's flashing something to us, and we don't really know what, because even on this cool print, like, the bond market reacted positively and then immediately reversed and got to a new high of day. So, like, what's your take kind of on what is occurring in the bond market, and why is there a divergence between macro data and what the market's seeing and what the bond market's showing?
I honestly think a lot of it has to do with Trump. I think that, and we saw this back whenever, he was president-elect early November, the bond market went crazy. It started to go kind of nuts, call it September, October, but it really, did its thing in November after Trump was elected president. And in my opinion, the bond market's just looking at this and saying he's talking about tariffs, he's talking about trade this, wars that, Greenland this, Canada that. I mean, things are all over the place. Like, I think it's just expecting a lot of inflation, and then that original inflation hunch has sort of, those fires have been stoked by higher CPI data than what was expected.
Mm-hmm.
And now it's nice to see that PPI is like below expectations for today. Like that's pretty cool, obviously, which is why we're in the green. But I think a lot of people are now like looking at the bond market, which is saying, hey guys, inflation might not be subdued just yet. And now they're looking over at the Fed saying, hey, if inflation's not subdued that we thought it was going to be, maybe the Fed's not going to cut like we thought. And then you talk about adding all those jobs that happened last week for the month of December. And now we're like, okay, guys, cuts are just off the table. We all want cuts because when we cut, obviously it changes the enterprise value calculation. And that's how, call it small caps and mid caps can really begin to run, especially the most unprofitable ones. But without that, it's just kind of luck of the draw.
No, I mean, I I agree with that sentiment, and I think that Trump is his bark is bigger than his bite on
Yeah.
tariffs. I think it's not going to be as worse as bad as feared. I think once he gets inaugurated and you see the first couple weeks of his presidency, you're going to see that spotlight occur on. It's actually going to be more gradual. It's not going to be as impactful, and that's when you see, I think, the 10-year yield finally reversing courses, because it's been freaking stubborn
Yeah.
for quite some time. So yeah, so I think that's kind of, I agree with that sentiment. I think what it's interesting timing too, because the earnings season is just beginning. I think we have banks on Friday, we have TSM on Thursday, but TSM is like kind of a weird one because we get the monthly data already, so we know it's gonna be great earnings. Don't know what the guide will be, but the peak of earnings season is gonna be the same time as the inauguration. It's gonna be a crazy time for all of us, which we're all content creators in the stock market. Like, where's your eyeballs going straight? Is it going to be towards earnings, or is it going to be towards what Trump's saying?
It's a good question. I think, ooh, it's a really great question, right? Because if we like reflect on like 2016 to 2020, especially the first like 2 years of that, it was a lot of Trump would tweet this, markets would react this way, and then once the markets reacted, then he would like tweet again, and then like the markets would go back. So it was just like this crazy like feedback loop of,
Mm-hmm.
reacting to whatever Trump would say. And to your point, Bark being louder than his bite, 1,000%. In my humble opinion, I'm focused on earnings. Like, of course, Trump, I think, is going to say some crazy stuff and will continue to say some crazy things. But at the end of the day, like, I think he's got a lot of good people in his corner, and I think to his core, at least what I've seen so far, this go around, he really wants America to win, and that might come in phases. That might be, some tariffs here, maybe some higher inflation here, like whatever might happen in the beginning. But I think over the course of the next 12, 18, 24 months, like I think he'll put the right pieces in place to hopefully reward the most dynamic and profitable companies inside the S&P 500. Obviously, he's talking about some cryptocurrency stuff. Obviously, he's all about artificial intelligence. He put David Sachs on his side when it comes to AI and crypto. So it's like he's got the right people in his corner, to help him navigate those new technologies. So yeah, I mean, I'm optimistic. I think earnings is going to be more important in the long run, but probably in the short run, people are going to react a lot to what he has to say.
No, I agree with that sentiment as well, and I think part of my thesis also on why like a lot of these early secular growth themes are catching bids when Trump won presidencies because he is all about making America the greatest first, ahead of everything. So he's going to guarantee, like for quantum specifically, he's going to guarantee America has the best supercomputers in the world. He's not going to let China win that. He's
Oh
going
yeah.
to guarantee U.S. has the best space infrastructure exploration than any competing region out there in the world, and he's going to emphasize dollars deals towards these arenas because he wants to make sure we're ahead. Same thing with AI. So I did want to ask you, like, that's kind of what I'm thinking on the Trump bucket trade. But for you specifically, what are the three things you're looking at right now for 2025? Because as we begin, because I love kind of asking people's mentality about what they expect, and then also reflect towards the end of the year. But since we're in the beginning of the year, what do you expect the three things to happen?
So let's break this down into like two different categories. Three market predictions, general market predictions. I'll hit you with those real quick. The first general market prediction I have is that I expect volatility to be around in 2025. JP Morgan data says that the S&P tends to pull back between 12 and 14% on average during bull markets every year. We haven't seen that in 23. We didn't see it in 24. I think we're going to see double-digit pullbacks in 2025. The second quick market prediction is I think we will see cryptocurrency experience its peak. I think in the second half of 2025, if that's a Bitcoin blow off top or whatever's going on, I think we'll likely see that as well. And then the third quick market prediction is I think the IPO market will begin to heat up as the Fed cuts rates, hopefully continues to cuts rates in 2025. Back-to-back 20%, years in the S&P 500. A lot of pent-up demand, I'm sure, thinking about SpaceX and OpenAI and Databricks and all those cool companies, right? I think we're going to see some cool IPOs. So those are like my quick three like market general predictions for the year. But digging into like what I'm specifically looking at, so I've got a stock, an ETF, and a theme. So let's start with the stock. This stock was shown to me a couple days ago, and I used to work in the healthcare industry. I did mergers and acquisitions for the nation's largest home health hospice and personal care company. It was acquired by United Health. It was an
Whoa, whoa,
awesome
whoa,
time
whoa,
of my
whoa.
life.
You know I'm the director of corporate strategy for United Healthcare right now. Like, I had no idea you were in healthcare.
Oh yeah, dude. No, I did M&A for Emedisys, which was home health,
It's a
hospice, and personal
small
care.
world.
Bro, I
Crazy,
do
man. I didn't know
M&A,
that.
M&A stuff for UNH all the time. That's so funny. Okay, continue. Sorry to interrupt. I had no
No, no,
idea.
you're good, man.
Because we
UNH,
both
yeah, you
talk
guys are.
software stocks all the time. Like,
That's awesome. Yeah, we should talk healthcare soon. But well,
yeah.
then this company probably you're very aware of, which is Oscar Health.
Hmm.
Ticker symbol OSCR, right? They're a healthcare technology company. They've built around this, they're a company that's built around like technology at its core. They offer individual and family plans, as well as a technology solution that empowers the entire industry through Plus Oscar. Now, what's really cool is when you think about this company, you're like, okay, well, what do they do? Think about them as this normal healthcare sort of insurance type vibe. You just kind of join a little family plan or join a little individual plan, just like you would at your normal job. But what I think they do so very great is they really plug in technology, AI, and automations to encourage you to actually show up to your check-in appointments, actually go grab your medications, refill those prescriptions, actually have that great time with your doctor where you want to hop on a call with him or a Zoom or her, whatever is going on there. So they've done a really great job of using technology to help them achieve specific KPIs that in turn lower their medical loss ratio. And medical loss ratio is just the amount of money paid out in claims against the total amount of premium collected. So the Q4 earnings are going to be in February, but reflecting upon some Q3 earnings right now, 1.65 million members are enrolled in their insurance plans, 68% increase year over year in that number. During the quarter, they piloted an AI tool that extracts patient data to prevent fraud, waste, and abundance, which again helps them lower that medical loss ratio. The lower that number is, the more money they keep for themselves. They also use AI to enhance member speed of care, including a feature that pre-populated preventative screening recommendations based on medical history. I think that's really cool. And something else they did is they allowed AI helped them translate some cool stuff. They launched a Buena Salud tech solution specifically for Spanish speaking patients, which apparently I didn't know this, which I thought is fascinating. A third of that 1.65 million of their members are fluent in Spanish, right? So it's like sort of that underrepresented region of the United States here when it comes to healthcare. Digging into the numbers because that's what people care about. Stock price, as you can see, is 14.25. At $14.25 a share right now, it's a $3.5 billion market cap, $3 billion enterprise value. The company is expected to deliver 200 million in adjusted EBITDA in 2024 here, and 450 million in 2025. 2024 is the first year they'll be GAAP profitable, 30 million in net income. Wall Street expects 250 million in net income in 2025. So this is like what got my ears perked up, right? $3 billion enterprise value, $450 million next year in expected adjusted EBITDA. We're talking about a company that's trading at 7 times forward adjusted EBITDA. This is not 7 times forward adjusted EBITDA without any growth, or 7 times forward adjusted EBITDA with no path to GAAP profitability. This is a company trading at 7 times EBITDA that is growing 45% revenue in 23, 55% revenue in 24, 25% revenue expected by Wall Street in 25. Like they're growing 30% per year and they're GAAP profitable with a total addressable market. They're only in 18 states right now. Think about how that begins to translate over the next, call it 5 years. So in my opinion, this stock right now at 14.26 right now on your screen seems to be like, it really reminds me of Hims and Hers back in like 2021, 2022. Obviously a very different business model, but like they weren't profitable. People didn't really see all the stuff that they had going on behind the scenes. They didn't exactly understand like just how big the TAM was. And then popped off Hims and Hers obviously in 2024.
And now
So
everybody
I
wants to
really,
own it, right? Like
I'm
now
sorry.
everybody wants to own Hims, you know what I mean?
Yeah,
You
man,
see.
absolutely. So I think that this company is poised for a lot of success at this valuation, right? At 7 times. Because I mean, Shy, tell me if I'm wrong here, man, but if a company's growing at 30% revenue and they're GAAP profitable and they are on track to deliver, let's call it $1 billion in adjusted EBITDA in the next, call it 3 or 4 years with a clear path to doing that, I would put a much closer to 12, 15, 18 times EBITDA multiple on that, not just 7.
No, you're accurate. I mean, it's undervalued. I think they're. I have to be tricky because I did sign an NDA, so I can't talk too much about healthcare. But on the specific numbers that you assign, like yeah, absolutely, it's undervalued. But I think there's something maybe more semantic that's happening on that whole space that's probably providing like that headwind on the stock where it looks undervalued. There's more of a premium, but something's holding it back. I think it's not an Oscar health issue. I think it's just there's a V28 that occurred in the healthcare that's going to affect a lot of companies. Uh, Essentially, governments paying less money to these providers,
Mm-hmm.
insurers, etc. So like, I think like once that narrative goes away, this is one of those names that could potentially catch a major bid because, like you said, it's undervalued and their fundamentals are chef's kiss.
100%. And what's so cool too is like we've been there before, right? I mean, obviously not to these higher multiples, but like I'm looking at the stock price, it was up to 23, $24 a share um, earlier this year. Obviously, when they IPO'd or SPAC'd or whatever it was all up to $30 a share. Just like it, again, the chart reminds you so much of Hims. You look at the Hims chart back in the day, and it went from like 25, $30 a share back when it like just first SPAC'd. Oh, cool, we can pull it up. That's great. Yeah, so like if you go to like the all time there, you see like that crazy pop that happened back in 2021. It was in the beginning, and then it went from like call it 25, $30 a share all the way down to like five. And then it was because no, it wasn't profitable. The growth was still happening, but people had no idea what was going on. And then it really started to see some momentum in 23 and obviously now in 24. And I think that, we're about a year or two behind that right now with Oscar Health. So I'm really excited about this company. I think they have a clear path to delivering $1 billion, $1.5 billion in adjusted EBITDA by the end of the decade. You put a 10 to 15 times multiple on that, let's call it $20 billion of market cap against 3.5 billion. I mean, that's a 7x, 6x at least in stock price in the next, call it 3 to 5 years. I think that's super, super doable.
Well, also, I think the niche for Oscar is, are you bullish on the gig economy? If you think the gig economy will continue like ramping up, like this is the way to play it because that's kind of
Yeah.
their bread and butter. Where their competitors, the bigger players, like they don't really care much about it, but Oscar does. So like if you believe that the gig economy isn't just a COVID thing, that's going to be a structural shift in our lives for the next couple of decades, this is a sympathy play for that.
100%. And something else I'm sure that you could, relate to working in healthcare is, um, I think this was a stat that was shared in 23, so I'm sure the number is higher now, but 48% of their members are in capitated value-based arrangements, right? So it's like what they're trying to
Ooh, that's my
do.
love language. That's all I do.
Yeah, man, we love a good
At
ACO.
Optum.
And so it's just it's really cool to see that they are at the forefront of strategy and technology in healthcare that we know these companies should be operating at, but for whatever reason haven't been for the last
Mhm.
decade plus. So I think they're just at that bleeding edge of like true strategy, leveraging AI to ensure efficiency and lower their medical loss ratio and everything in between. So really like Oscar Health here at $14 a share. I bought $5,000 worth yesterday, just about 14 or so. So full transparency, I opened a position on this yesterday, and I'm really excited about it. So back to this theme, right? Like let's jump to this next idea, which is an ETF. Back to this theme of like increased volatility. This ETF by Neos Funds is called NUSI, the Nasdaq 100 Hedged Equity Income ETF. NUSI is the ticker. It's a covered call ETF that not only generates tax efficient monthly income for its investors, like all of their other ETFs, but it takes a portion of the premium generated that month by selling those out of the money covered calls against the NASDAQ and uses that money to buy a put option contract 3 to 5% below the current price of the index, right? So it's like, okay, what you're saying is I have all exposure to the NASDAQ 100, right? I own all the constituents of that underlying index. And then this company is writing a covered call against that exposure. So they're going to generate some income. That covered calls 3 to 5% out of the money. So I have some upside potential. And it's only written on about 75% of the notional value of the fund there. So it's not even all of it, which is great. So now we've got a little bit of upside potential when it comes to price. We have this awesome income that comes in, and now I take a portion of this income and then I go and I use it to buy a put option contract below 3 to 5% below the Nasdaq. So that means investors are one, owning every single name inside the Nasdaq 100, just like they would with QQQ. Two, they're getting tax efficient monthly income by selling a covered call against those holdings. And three, using a portion of that income to hedge against downside risk in the markets. Why is this important? This is important because 2025, like I said before, is going to be volatile. We've already begun to see that in the first couple weeks here in the markets. The S&P 500 as of yesterday's close was down 1.3% year to date. As of yesterday's close, the Nasdaq 100 was down 1.7% year to date, and the Russell 2000 was down 2.5% year to date. Now compare that 1.7% contraction year to date as of yesterday's close in the Nasdaq to NUSI's negative 0.5%. 1.7 over here with the normal NASDAQ, or a zero point 0.5 contraction over here with NUSI. And then when you add on their 0.7-ish percent of monthly income yield, right, that gets paid to investors, if the month ended just yesterday, right, which obviously it didn't, but it would have outperformed QQQ by nearly 2%. Right. So it's like you compound these 2% months on it on one on to another, and it just turns into, I think, a really interesting way to have a hedge in a portfolio, right? So I mean, if you're someone who's expecting volatility in the markets like I am, I think having a hedge in your portfolio is smart. Therefore, NUSI and USI, I think, is something that people should learn more about, especially if they are big tech investors, like I'm sure Shy, myself, and Jordan are.
Yeah, really good stuff. I need to take a look at New Sea myself. You actually got me interested, so
Dude, it's
I'm gonna.
awesome, man.
It is
It's a
very
really
cool.
just and
Well,
what's crazy.
you've always thrown some great opportunities from Neos funds our way on Spaces as well. I always love talking about some of the tickers you guys have over there, so I'm definitely gonna be looking into this one as well.
Dude, absolutely. And I think what's so cool too is, um, with NUSI, if you can look this up if you want, they outperformed QQQ in 2024.
Oh,
It was
really?
only by like 3 or 4%,
But
but
still,
the strategy
it's something worth noting.
outperformed in 2024, right? So like that to me was like, yo, what? Like that's crazy.
Yeah,
So
this is something
yeah,
to
it's
watch.
it's really interesting. It's in my portfolio. Everyone should have it on their watch list. NUSI, if you've got tech in the portfolio and you think we're going to see some continued volatility, like we have started to see just this year. Shai, you're just talking about how you think that this, Green Day is likely going to be short-lived, which I largely agree as well. Having some NUSI in your portfolio could be a good idea.
This one's been around for a minute too. I see 2019.
It has been around for a minute. It has been around for a minute.
Very nice. Great stuff there.
All right,
Um,
so we talked about a single stock, which was Oscar Health, right? Super bullish on that at
talked about
$14 a share.
ETF. What do you got for us now?
Talked about the ETF NUSI. Now let's talk about a theme, and I think Shy is gonna love this one because he's the sci-fi futuristic. He's got that mentality. So the big secular growth trend theme that I am just balls to the wall, excited about, and ultra invested in. I'm talking, I have over $200,000 invested toward this secular growth trend across different stocks and startups, is physical AI. We all heard from
Mm.
Jensen Huang at CES that he believes agentic AI and physical AI are going to be the next major forces that drive this technological revolution forward. I'm still learning about agentic AI, right? We got, what is it, Agent Force with Salesforce, and Zuckerberg said on the Joe Rogan podcast last week that Meta AI agents are going to be useful, as useful as like these mid-level coders. Like there's some cool stuff happening there. I don't really know too much about it just yet. It's hard for me to like imagine that, but I'm laser focused on physical AI because I've seen it, I understand it. It's very simple to comprehend there. So being able to take this technology that is AI and bring it to the physical world via robots, autonomous driving, and my favorite, humanoids, right? These humanoid robots, the Tesla Optimus, the Aptronic Apollo, the Figure AI, whatever the heck the name of their robot is. Like it's amazing. Robotics are all over the place. I've seen this little dog thing on the All In podcast. It was like doing some
I've seen
farm
that
stuff. I
too.
don't
Yeah.
know. I'm not paying attention to little robot dogs. Autonomous driving though, I think is really cool. I am paying attention to that. I do though think we're 2 to 4 years away from being like, oh yeah, that's an autonomous vehicle. I've seen them 100 times, right? I think we're still far away from that. I feel like that's kind of where we are right now with the Cybertruck, if that makes sense. You guys see a Cybertruck in the wild, you're like,
Mhm.
oh, cool, Cybertruck. Like you just kind of like keep going.
Hmm.
Um, I think we're a little far away still from autonomous vehicles being like, oh, cool, autonomous vehicle, right? So like
Yeah.
one, that's an opportunity. We talk about Uber and Tesla and all these other cool things like that. With Google's Waymo. And I think it's also going to be an uphill battle, but obviously Elon being BFFs with the Don is probably a good thing there. Um, Tesla's
Well,
easiest way to invest in autonomous driving, as is Google with Waymo. But I want to talk about these humanoid robots more specifically because I
Dude, they're
think that's
so
where the
freaking cool, bro.
true, oh my God,
I think they're so cool.
it is unbelievable. And I think
the
that's where
bi-
the
A
it's
true
little
the it's the big
scary, I will
no,
say, but cool.
it's going to be the biggest TAM of our generation.
Yeah.
Humanoid
I
robots, like the robotics.
1000% agree. Like I think that humanoid robots will be, and it's not just like the biggest TAM of our generation, it's the biggest TAM of our generation where the imbalance between the buyers and the sellers, right? The demand versus the inventory that gets created every single year to meet that demand is going to be astronomically more on the demand side, right?
Mhm.
Completely imbalanced for the next probably 10 to 15 years. Like you just imagine the day that a Tesla Optimus bot or a Figure AI bot or an Aptronic bot actually can demonstrate at 80 to 100% human speed, 1, 2, 4, 7, 12,000 skills when as it relates to doing something at a manufacturer or
Well,
in a factory or something else, right? And now they're doing all of this, and you have robots as a service, right? You're leasing these things. You don't have to pay for health insurance. You don't have to pay for 401k. They don't need PTO. You just got to charge their batteries. And these things are so freaking crazy. Go check out the Figure AI video. I think they're at like a BMW, manufacturing plant or something. And it's just these like three robots that are just walking and they're grabbing stuff, they're moving it, they're putting it in place. And then when something falls off because they put it in wrong, they look at it, they realized it fell off, and they go pick it back up and put it back on, right?
Oh my
These
gosh.
it's crazy stuff.
no, you're absolutely nailed. I have to add some color because you nailed Austin. You knew that would get me excited. That physical AI, like I think robotics is one of those themes that you can't miss of this generation. You just
I agree.
can't. There's three major players right now that you can invest in. I'm wondering if Austin agrees with this, but like, it's obviously the three obvious players where we have Nvidia. Their
Hmm.
Omniverse platform
Yep.
allows you to design and test robots in their virtual environments. Huge. Then you also have like what Austin said, humanoids through Tesla. That is essentially Elon's way of tackling real world AI towards labor. And also like what's happening in like the fires in LA. Like, do you not think that robots would help that? Just helping out the firefighters. Like there's going to be so many applications on robotics in consumers' lives. It's gonna be wild. But the third player is Amazon. They're quietly leading the logistics of robots, where they already have 750,000 robots in their warehouses today. The margin expansion opportunity for their e-commerce business is wild once this robotics gets to scale, because it's $3 an hour versus $20 an hour for a human. I
Hmm.
should not say human workforce FTE. So like I do think like robotics or physical AI, it is. If you heard from Jensen last week, it's clearly not a sci-fi dream. It's a near-term reality, and you need to be able to do your conviction research like Austin has done, and he's positioned himself to capitalize on this thematic that's undergoing a structural shift that's going to affect every industry in the world. If you don't, you're going to feel like the fool that missed out on the internet bubble because the .com was creating some squeamishness, and you want to invest in the Cisco, IBM, Verizon, AT&T, but you missed out on the crown jewel of that era, which was the applications or the accelerators of that revolution, which was the Amazons, the Googles, Microsoft, etc. Same thing's going to happen for robotics or physical AI. Like, don't miss that boat. I want to add that color on top of
100%
what you said,
agree right
Austin.
there.
Yeah.
And additionally, just if you guys want some additional resources to just kind of bring this, put a bow on this, Shy is 100% correct. There is I think it was 2 weeks ago, maybe 10 days ago, um, a report in the Financial Times where Nvidia was talking about how they believe, and I think it was like the head of humanoid robotics or robotics, something at Nvidia was quoted as saying that the Chat GPT moment for physical AI is 12 to 18 months away, right? That's literally the quote. So it's like, I firmly believe that we've seen the cool generative AI stuff and we're going to see the AI agents. Like, all that's going to be great. But it's one thing to go from like software is making my company more efficient to that thing just picked up a box and moved it over there. Like, that was
Yeah.
cool, right? And so like you begin to like that's when the TAM, to your point, Shy, goes from like tech enabled companies to every company. And every company wants cheaper labor. Every company wants someone that can work 24 hours a day, wants to make sure that they can have, they can take instruction without complaining or do things. Like, it's just like,
Mm-hmm.
it is so amazing. And I am so well, yeah. So I've got 200 shares of, actually 250-ish shares of Tesla stock. I've invested $100,000 into a humanoid robotic startup. I am super, super exposed to this industry. And I am a firm believer that over the next between now and 2030, so let's call it now and the end of the decade, like humanoid robotics will be in the limelight. They'll be used by hundreds of companies in a commercial setting, and I'm not talking like company. I'm talking like Mercedes-Benz and BMW that are already using them. I'm talking about like Pepsi and other big logistics like companies that like Coca-Cola, right? Like these companies that are actually shipping things and moving things. Like every company that has a warehouse is going to want to get their hands on one of these
Hmm.
robots. And the coolest one too, what's really fun is like Tesla is art like they're building the robots, and then after they build them they can use them themselves directly to create more cars and build other cool things, right? So like they're going to be the easiest
Build
ones.
another robot.
Yeah, build another robot, right? It's
Robots
it's
building robots on
Real,
robots.
dude, 100%, right? It's like robotception. So, I can't share the specific name of the startup that I've invested into, but if you go look at and you just look at some startups, you'll probably find them. There's like 3 to 5 that are like really popular, right? I think there's like with the 1X, I think there's Aptronic, there's Figure AI. I think Boston Dynamics is owned by Hyundai. So like, I guess what I'm saying is you can probably do some quick research and figure it out. But like there, and so what's so fun about this too, guys, is this isn't a category, at least 12 months ago, this was a category that everyone was ignoring, right? The only company that was like actually thinking about this were the super, super smart ones that were OpenAI, right? They partnered with Figure, and then they partnered with, Nvidia, and Figure got all this cool stuff going on. Like, that's fun and great. But now you think, okay, Google DeepMind is now partnered with Aptronic. You see that these other companies are now beginning to like really dip their toes and take this seriously and say, whoa, wait, this is a category we can't afford to miss. We have to be able to be in lockstep, walking hand in hand with some of these companies to one, make sure they're using our LLMs and autonomous play boxes or sandboxes that you're talking about with Nvidia. But it's just great, man. I get so jazzed up thinking about this stuff.
Well,
I really think in 5 years' time, like we're gonna look back and say, whoa, this was the best investing opportunity of our generation.
blink twice if the startup is Andoril, and if it is, let me know when the next private round is.
That'd be really cool. It is not.
I want part of that company so bad, and I missed out on the latest funding because I just forgot about the deadline, and I cannot wait to get some exposure. Honestly, investing in private markets on disruptive companies is the way to go. Like I just got into Databricks the latest round. I think like these kind of exciting startups, if you handpick them, they do provide generational wealth. Like
Mhm.
because if they're early, have a duopoly, a monopoly, and an early secular growth theme that's just beginning, and then in the private markets, they're going to land and expand. They're going to not care about shareholder value because they're all about dominance, market share, getting closer to the end goal. Don't have to deal with the quarterly earnings reports, the all that spotlight. So yeah, I think physical AI is the future. It really is, and it's like you said, 12 to 18 months away. Yeah, 2026 will be the year where we're going to have the next presidency. I guarantee there will be robots during the inauguration day. Let's just say that. That's how crazy we're gonna be.
I love it. I love it.
Well, great morning, boys. Austin, I appreciate you coming on with us and sharing some of your thoughts on these tickers. I really appreciate it, man.
Yeah,
Feel
absolutely.
free
And
to drop your handles. Where can people find you? And then I think you have a newsletter as well. I'd love to hear about that real quick.
yeah, so if you're looking for more of like the general personal finance and investing knowledge, which I think is a lot of what I'm good at, is I have a podcast called The Rich Habits Podcast. It peaked at #1 on Spotify's business chart.
Let's
We have about
go.
70,000 weekly listeners that come back every Monday morning to hear what we have to say. Monday's episode yesterday was talking about, I think it was our market predictions for 2025. So you kind of already heard that here in this episode, but go check out some other ones of the Rich Habits podcast. I also have a newsletter called Rate of Return. It got acquired by Grit Capital back in September of 2024. So now I write to about 250,000 emails every single week. Every Monday morning, I give you guys, hey, here's what's going to happen this week: earnings, investor relations stuff, conferences, presentations, economic data, everything to expect Monday morning. And then on that following Sunday, I give you the quick review, what I think about it, how my portfolio has changed because of specific earnings, things like that. And I'm also on Twitter, just at Austin Hankwitz. I am on TikTok as well. That's where all my stuff really started, short form video, but I don't know how long that's going to be around. Fingers crossed, though. I can still plug my TikTok in 2025. But yeah, the newsletter, Rich Habits podcast, and Instagram, TikTok, all that fun stuff. Just type in Austin Hankwitz on the internet, and I'm sure.
Essentially, Austin is trying to say humbly, he's everywhere. Everywhere.
Everywhere. Well, great morning, boys. Austin, you're the man. Appreciate you again coming on. We'll have you on again, I'm sure. So
yeah,
great talking with you. Yeah.
Thanks
Shy.
again, guys. See you later.
Yep. Have a good one, Shy. Have a great day. Everybody in the audience, trade safe today. We got this data. Market's moving. I haven't really done anything yet. Not much.
SPY almost
clarity
went
for me,
red in the
so-
past 5 minutes.
Oh,
So
gosh, yeah.
I knew it was gonna be a fading move. It's bouncing a little, but like it's not what you want to see.
Yep. So
TLT is the
be
leader. Like
careful.
that's how you can tell.
Yep. Good stuff. All right, y'all. Have a great day. Make sure you guys are liking, subscribing the stream, and we'll see you bright and early in the morning for Wednesday morning. Peace out, guys.